Greetings from the Charter School Office. I'm Albert Bertram, the Finance Specialist for the office. So this sheet is the review of the audited financial statement. So this will summarize the large audit into 4 pages and then provide some other calculations and some other data not derived from the audit, which I'll show you is just the enrollment data. So as we get into this sheet, this is something that can be compared from year to year pretty quickly compared to having to compare audits from year to year. So that's why we created this, and we utilize it in our office for communication between all of us in the office and the field reps. We tried to bring it to you guys, the board, last year in regional board trainings, but this we hope that this method is better because it's more specific to your school and it's brought directly to you. So we hope you enjoy it, and that was our functionality behind it. So before I get down into the sheet, you'll notice that this says CSAS. That's the management company that was still part of this school at this time, so that's why they're up here. We know that EMAN, or Education Management, has taken over, so that's why that's up there, just so you know. So statement of net position. These numbers are all derived from the audit. I'll show you that as an example. Total assets is $553,862, so I'll show you that on the audit. We'll go to the audit real quick. So here's the statement of net position. Here's the audit, $553,862. So if you wanted to come back and match up these numbers or look where they're at, you could do that. I won't do that for time, but we'll go back to the review sheet. So as you scroll down, you'll see ending net position. So ending net position is the June 30th, 2014 number, and this is the June 30th, 2013 number. So this lets you compare from year to year. So there was a slight decrease in that position from 13 to 14. So as we move down, this is the balance sheet, general fund current assets. So these are general fund current assets. Then over here we have the general fund classification. So I'll show you where that is too. So we'll go back to the audit. The balance sheet is 2 pages after the statement of net position. So 1, 2. There's where it says balance sheet. Now some schools have a debt service fund, school service fund, whatever. If that were the case, we would only still be looking in this column, but since it's the only column, it's pretty easy here. But just so you know, if you add another fund, for this part of the sheet, we just look right here. So here's our current assets. As we scroll down, here's our fund balance classifications, and there's only the unassigned fund balance classification of 1814. So go back to the review sheet. So here's our current assets again, and then there's that 1814. Now if you don't know what any of these fund balance classifications are, the definitions are directly in the audit. I'll read to you what this one is. Unassigned are amounts that are available for any purpose. These amounts are reported only in the general fund. I won't get into these other ones because they're not part of Academy of Waterford's sheet. So, but if you were interested, they're defined in the audit. So we'll go up here now before we go down. This area is a quick snapshot of the activity for the year. So we have our beginning general fund balance, our revenues, total expenditures, other financing sources, the net change, and then the ending general fund balance. So this is as of June 30th, 2014 again. So down here, these calculations are based off of these numbers. So general fund divided by revenue takes the ending general fund divided by revenue. General fund less restricted divided by revenue would, if there was a restricted amount down here, which a school would usually have a restricted amount for a debt service on a revenue bond or something like that. If that was down here, that would take that in consideration. There's no restricted amount, which is why those are the same. Then general fund divided by expenditures takes the ending general fund divided by total expenditures. The state kind of looks at this number. That's why we include it. But if there was a large capital outlay at the school, that number could potentially be skewed. So it's important to look at both of these numbers, and if they're different, if the school didn't break even with the net change or be close to breaking even as it is here, it's important to note why these are different. So that's why it's good to look at both of those. Ending general fund balance divided by beginning general fund balance is ending general fund divided by beginning. Now if this is above 100%, there was a positive net change, which there is a slight positive net change of $97. If this is below 100%, there was a negative net change. So that's what that shows, which lines up with that. So as we move down, these 4 boxes summarize the notes section of the audit. They're part of the template. That's why even though they're blank, they're still here. This would be associated with a state aid note or other short-term borrowing. This is associated with a long-term debt, like a revenue bond or that type of thing. Most schools either use a revenue bond to purchase a building, or they utilize the leasing method, which is how Academy of Waterford utilizes their building, or finances their building. Excuse me. So over here, I'll get into this in a moment, but management fees. You'll notice this box calculated with state aid and federal revenue times 0.1. This is an overhead not included. This was from the notes. So I calculated out the total, what the management fees would have been. So I'll show you that. So come down here. So you see the total state and federal revenues, and then multiply that by 10, and that's where this number is derived from. The management fees were waived, which is why this is here, and that's why this zeroes out, and that's why this zeroes out. So this calculation would take the total management fees and then divide it by the total state aid on the next page. So the total state aid right here. Since the management fees zeroed out, this zeroed out. So I took over here. I won't. This won't be included on your sheet. But if this wasn't waived, this would have been 11%. Now this isn't the contractual fee. This is just taking the total management fee and dividing it by the total state aid. So that's what that is. So this won't show up on your sheet, but I wanted you to know what that was. So fees divided by fall 2013 takes the management fees and divides it by the fall 2013 count. Again, this should be 0 because the management fees were waived, but I left it like that just so you could see what that would have been. Before I move down, I'm going to move over here. This is the building information. This shows the what the total building price should have been. This payment was still included. That this payment was for 6 months of the year, and then that's another 6 months of the year was waived. So that's where what this is saying. And then the total payments. This is actually just showing that this was the total payments throughout the year, and then the balance is 0 for the year. So that's what this is, and then this would have been what the total payment should have been throughout the year if an amount hadn't got waived. So utilizing that information and this square footage over here, we do a couple calculations. So we have our taking the square footage, we have our revenues per square foot, expense per square foot, which you can compare this from year to year just to see if there's a trend upwards or downwards with something. You'll notice that this is a 0 when it should actually be 1. The reason for that is rounding error. There's no decimals. I just cut the decimals off, so that's why this is a rounding error. So payment per square foot. This is the number the auditor had listed in the audit, I believe, which I think this is the first time I've ever seen an auditor write a payment per square foot amount. And that takes the total payments and divides it by the square footage, and that's where that $6 is derived from. So if this wasn't waived, it would be essentially doubled. So just so you know, because half of the 6 months of the payment was waived. So moving over here, operations and maintenance takes the line item. I'll go to the next page. The line item of operations and maintenance, and then divides that by the total square footage. That's what that is. Square footage divided by fall 2013 takes the total square footage and divides it by that fall count. It's just a comparison to show the square footage per student. So that's all that. Again, this number won't show up. As we move into page 2, this is the general fund comparison. This lets you compare the box in the upper right hand corner of page 1. It is more detailed than that box. So here's the revenue sources for June 30th, 2014, June 30th, 2013, and then the difference. So you can look at these differences and say, why are these different? What happened? That's what this sheet is meant to do. Excuse me. So as we move down, you'll notice some of these accounting codes. I've had questions from a couple board members that didn't know what these were or what all these line items were. So I thought it was important to include this in every one of these videos that I'm making. So if you didn't know what basic programs was, for example, I'll show you a nice trick to figure things out quickly. You take the accounting manual, you put it in Microsoft Word. I believe this is Word 2013. Go to the upper right hand corner, push the Find button, and then come over to the navigation bar. Type in something. We'll use basic programs as an example. Make sure you're on results, and then you can actually skim through this document and it will show you where that's at in the document. Now, you can't do this for broad words like instruction. It has to be kind of focused, but once you figure a good search focus out, you can find things pretty easily. So here's the accounting code. This is how things are differentiated in the accounting books. Basic programs are instructional activities including enrichment designed primarily to prepare pupils for activities as citizens, family members, and workers, as contrasted with programs designed to improve or overcome physical, mental, social, and or emotional handicaps. Includes pre-kindergarten, blah, blah, blah. So it goes on, but I won't read any more to you. This is just an example, so if you wanted to read more, you could do this, and then you could just scroll down, you can find whatever. So it's important that the board knows what all these are in order to understand the relationship between them. Now, so I won't get into all the details of these. You can kind of look at that and compare things yourself. But this ending right here should match up with that box in the upper right hand corner of page 1. And again, this is June 30, 2013, so you can compare the two. So down here is the budgetary comparison. This takes the original budget, the final budget, and the actual, lets you compare them. These are from the audit. The budget difference takes the difference between the final budget and the actual, and then the percent change calculates the percent change between the actual and the final. Now this box is just here to state that the original budget is due July 1, and there's usually a large discrepancy between budgets depending on how the count data changed or whatever happened during the school year. So that isn't the case with all of our schools, but with several of them it is. So that's why that's there, just as a reminder. Now down here, this is a kind of an interesting calculation. This is the instruction percent of revenues, which takes the total instruction and divides it by the total revenues. I'll go up and show you up here. So total instruction costs divided by total revenues, that's what that does, and then it computes it into a percentage. So you notice that it kind of went down and then it went back up. So to explain why that increase happened, we'll go back up. So you'll notice at first glance, you'll say that the school spent less on instruction by $25,000, but that percentage went up, and that may be misleading to some. In order to understand the relationship for that ratio, it's important to note that revenues went down by a lot, and these didn't go. Instruction expenditures didn't go down by nearly as much as that. So that's why, even though instruction expenditures did decline, they didn't decline at the rate of revenue that the revenues declined. So it's important to understand that relationship. Another example that could impact these calculations is if a senior teacher was resigned or retired that was getting paid $50,000, and a newer teacher was hired for, say, $30,000, that would actually decrease those expenditures, while not necessarily providing less instruction than the other teacher. Now, we won't get into quality, but that's something that could impact these numbers. So it's important to know what this relationship shows, and then know how to answer the question. So June 30th, 2014 revenues divided by fall 2013, and then June 30th, 2014 expenditures divided by fall 2013. This is something that's good to compare from year to year to see how things are trending for revenues and expenditures. And then this is the difference between the two. Page 3 is the enrollment numbers. Now this is the stuff that's not from the audit. These numbers are from CEPI. So there's so many acronyms in education. I'll show you what CEPI stands for. So CEPI stands for the Center for Educational Performance and Information. This is a state-run site. If you come down to My School Data, you can click. You can go through a couple filters and then pick what you're looking for. So there's student count, free and reduced lunch count, special education count. Here's just a bunch of spreadsheets. They go down to 91, 92. So that's where these numbers are derived from. I went and dug them out for you. Those are really large spreadsheets. So that's what this is, the enrollment numbers from CEPI. So if they don't match up to your state aid sheet or something, that's why they're from CEPI. This number isn't from CEPI. This is the number I received via Epicenter, which is the file transfer system between the charter school office and the school, for those who don't know. And then the form I received was the DS 4061 which is just a account sheet, and it has the unaudited numbers for the fall count. So that's what this is. This is unaudited. If the audited number changes, this number will be adjusted in time, and it might change next year. So if you see this number changing next year, that's why. Over here, these are numerical percent change equation to show the trend between spring to fall, fall to spring. So between the counts, it's supposed to show the numerical trend. So you'll see there was a large drop from fall 13 to spring 13, excuse me. So as we scroll down, this is a better portrayal for many. This is a visual display of the data. So here's the drop. So you'll see that drop here, and then so this will portray the data in a visual manner versus a numeric manner. So down here we have our free and reduced lunch counts. These are all from SEPI again too. Over here, these take the fall free and reduced lunch count and divide it by the total fall count to come out with a percent free and reduced lunch count. So that's where these are, which they're pretty high for Academy of Waterford. So they kind of meet our mission from the charter school office's perspective. And down here again we have a graphical display of the data. So visual people like that kind of thing. So now as we move into page 4, this area is directly derived from the audit. This would be the notes page of the audit. So those 4 boxes on page 1, those are where this information is derived from, essentially. So here's some debt information, operating lease, and then this talks about the relationship with CSAS. Again, I know the management company has transitioned to, or the school has transitioned to a different management company, but this is from the audit. If you wanted to go look this up, the page number, I put the page numbers in here so you could reference the page numbers. Here's the so this was the debt section. Here's the management fee section, the management company section, excuse me. And then here's the during the current year, the management company waived all of its overhead and management fees for the year. So that's why that box on page 1 showed 0. No findings, which is good. And then I did add my own note to this one that the Academy has subsequently switched management companies to Educational Management, or EMAN. So it's important to note that this is reviewed, and then my information is right here, albertb@bmcc.edu. If you have any questions, before I depart though, I'm just going to show the budget. This is the budget for Academy of Waterford. This should be under EMAN. This was the most recent one I received. So this shows that there is a projected ending fund balance of $2,053. We know that there is a large decline in enrollment, as we just discussed up here. It's important for the Academy to try to right the ship, even though there's been a drop in enrollment. So we'll be in touch. I believe Academy of Waterford received a 2-year renewal, and so they'll be in our renewal process. So we'll be in touch with the school in relations to that. But we hope that you enjoyed this delivery method, and thanks for all you do for the children of Michigan. And we will be in touch. Take care and stay warm. Bye.